CoreWeave stock is down over 20% in the past week after recent downgrades and also because of a new acquisition of Core Scientific, which is approximately about $9 billion. CoreWeave acquired Core Scientific in order to stop paying rent on their data centers because Core Scientific was basically like the landlord to CoreWeave's data centers where they would have to pay leases to Core Scientific. So now that they bought Core Scientific, they will not have to pay any more rent for their big data centers. And if you didn't know, CoreWeave provides GPU accelerated infrastructure to other companies, particularly for artificial intelligence and machine learning workloads. And their main customer is NVIDIA, in which NVIDIA actually has a stake in CoreWeave, in which they own about 7% of CoreWeave. So basically, CoreWeave as a company provides the infrastructure for AI to be accelerated over time, which is why CoreWeave has rallied over 200% since their IPO. So with this slight decline in stock price over the past week due to these downgrades and acquisition news, I was going to take a look at CoreWeave stock, look at the financial health of CoreWeave, and determine if we should buy CoreWeave at this price using my 7-step stock analysis to look at the financial health of CoreWeave and using my intrinsic value calculator. The first two metrics that I normally look at for my 7-step stock analysis is the two PE ratios, both the trailing and forward PE ratio. This gives us a sense of the valuation of the company. However, as we can see here, they don't have a trailing PE ratio or forward PE ratio. Since the PE ratio is the price divided by the earnings, this tells us that they actually don't make any money as of right now. So CoreWeave is an unprofitable company, so we can't really get a sense of the valuation using this metric. So these are two X's for CoreWeave on the PE ratios, but it's nothing to necessarily be worried about. It's just harder for us to value the company. Next, I'm going to take a look at the revenue growth rate of CoreWeave. And as we can see up here, they have had such good growth rate. These numbers are in thousands. So they went from $15.8 million in 2022 all the way to $2.7 billion. So this growth rate is just insanely fast. They're growing at like thousands and thousands of percent. So this is really good growth rate and is probably why the company is at such a high valuation at about $60 billion this company is worth because of this insane growth from the AI infrastructure. Now taking a look at the net income of CoreWeave, I want this to be increasing at greater than 5%. However, as we can see with CoreWeave, they're actually decreasing over time and losing more and more money over time, which I normally never invest in companies that are unprofitable because I like to wait until they are profitable to get a good valuation of the company, but it's very hard to value a company that's not growing their profit. And right here, they're just losing over $1 billion in profit right now. So this company is very unprofitable right now, and it doesn't look like they're going to be profitable anytime soon. So this doesn't look good for CoreWeave. Now taking a look at the shares outstanding, I want this to be decreasing over time. And as we can see here, over each quarter, we can see that it's actually been pretty stable. So this is actually decent for CoreWeave, and I'm surprised they're not diluting us shareholders more. Because if a company sells their shares, they're going to be making more cash. So an unprofitable company is more likely to dilute shareholders, while a big mature company is more likely to buy back shares. So this actually isn't bad for CoreWeave. It still has increased maybe 1%, not even 1% actually, but it has increased over time, but it's barely increasing. So this looks good for CoreWeave, and I'm very surprised about this. Now taking a look at the balance sheet of CoreWeave, I want to see the total debt to equity ratio less than 50%, showing that they have more than double the amount of equity compared to their debt. However, look at CoreWeave's total debt to equity ratio, 387.61%. This means that they have over 3.8 times more debt than their equity. So this looks pretty bad for CoreWeave. And look at the total cash, $1.28 billion in cash compared to $12 billion in debt. This company is an unprofitable company. They're losing $1 billion each year with a debt of $12 billion. I'd be very worried about this company. Even though their revenue growth is insanely fast, I would really need to see this company become profitable in the next few years, or else I would be a little bit worried in this company. And finally, taking a look at the analyst expectations for their earnings growth rate, we can see that they don't have any expectations for CoreWeave. Probably because this is a recent public company and there's not much financial data on this company, so it kind of makes sense. So, nonetheless, this financial health of CoreWeave looks pretty bad to me. But that's just me and my investing philosophy. I would definitely stay away from this company, but I'm going to be taking a look at the intrinsic value calculator right now, and let's see if we should be buying this company, even though the financial health looks very bad to me. So the first thing that I'm going to do for CoreWeave is take a look at the revenue growth rate for the next 10 years. As we can see here, they have a revenue of about $2.7 billion, and they've been growing at a very fast pace, over thousands of percent in the past few years. So let's play around with these numbers to see what's pretty reasonable. First, let's put in a 50% revenue growth rate. This would give us $156 billion in revenue in the next 10 years, which I don't think that is necessarily where it will be. So that seems a little bit much to me. And I think a fair revenue growth rate each year would probably be about 30%. Where I think in 10 years they could have a revenue of about $37 billion. So I might be slightly conservative here, but I don't really know enough about this company, and there's just such a new company. You can't really know much about it and really predict what the value of this company should be. Now for the future profit margin. As we saw, they have a negative profit margin because they're not making any money. However, if we compare this to other AI and GPU data centers, like AWS and Microsoft Azure, their profit margin is anywhere from 20 to 40%. And I'm going to put this at about 15% because right now they're an unprofitable company, so there's really no telling of what price or profit margin this should be. So I'm going to be on the low end of the data centers. So that's going to give us a 15% profit margin, 15%. Now for the future PE ratio. Since they're going to be growing at such a fast rate, at about 30% each year, I believe, I think a good PE ratio is a 30. And with this being said, I need to do the final thing of the shares outstanding. And I think they're going to increase their shares over time very slightly. So especially with that acquisition where they're going to be offering shares, I think they're actually going to increase 5% each year. And with that being said, I get a fair value price for CoreWeave at about $221 per share. While this probably isn't very accurate because of the uncertainty of this company and how new it is, I still would definitely stay away from this company for now. I would wait till this gets into maybe like the 70s, around that area, to maybe add, and I wouldn't make this a big position just because of the uncertainty. But nonetheless, I think if you bought this today and you believe my assumptions and they somehow become profitable in the next 10 years and have a 15% profit margin with 30% each year revenue growth rate, I think that you can get a total return of 7.73%. So thank you guys for watching Valuation Investing. Check out my website, victor.com. The link is going to be in the description, where there's some finance products. If you want to support the channel and you watch all the way through and you really like what I'm doing, I'm making these videos for free, but I'm making a website where you can buy some products off it to help support the channel and potentially help me get a better setup for this channel. So thank you guys for watching this video, and see ya.